All right, you guys want to do a quick recap? Well, I'll make sure I don't have an echo. I guess the Zoom chat doesn't really show. Should though. There it is. All right. So good session, guys. I mean, we sold the highs on both euro pound and euro versus dollar. So, despite what old Wall Street likes to say, that you can't pick tops and just average in for your entire life at any level, doesn't matter, just diversify, which is a great way to blow up every business cycle. Um, when you have a timing process, you understand cycles. We buy and sell the highs and lows all the time. I mean, not every single time, but we do it a lot of times. Happens all the time. So, um, this setup on the euro, you don't really want to bring your higher time frames into play too much. But when you're core trading for the longer term, you have a view and you have some areas that you want to sell, and then you retest those areas intraday, it makes sense to be contrarian. So we've been talking about rolling over here longer term for a while. I think that's playing out. This daily cycle's done a great job. You can even look at these lower highs here in this trend on the RSI. So it's all the same stuff. But this is a topping process. And yeah, maybe anything can happen. Yeah, of course we could trade back above the highs and close the week above 126. That's just the risk of the markets. But from a cyclical perspective, what just happened here this morning, you took out a swing line sell setup. So the probability is that you're going to trade back here towards this downtrend line. You're going to retest 121, 122, 121 and a half. That's the probability. So I'm course short, gonna stay course short. And then today, here's the big picture view. I mean, this is the area that we're looking to be short. Right? This is not the time to be course short. Here is maybe a little bit different because you're looking for a break, but after a drop from here to here, this is the bottom of the range. Now we're back at the top of the range. So that we don't have the momentum there to confirm that yet. We got to break below 121. We got to get some weeklies to close. So we don't have the momentum to the downside on the euro. But I'd like to see the 8-week moving average here start to turn. That's certainly possible. And then obviously the longer term momentum is not going to change until you break 116. And then you get pi to roll over on the daily. What's up, guys? Santiago, Dim, Sector. We're just talking Forex, guys. We're just talking about our trades this morning. So you can see here on pi, the euro, 115, 116. That's where your pi line is. So really to start a bear market, we got to get priced all the way back below 115, 116. But that's big picture stuff. There's a lot of trades to be had in between there and then. So yeah, so we knew that this was, we're getting back to territory where we could get a lower high, and then we come in, it's like, all right, well, here's the highs from London. And I talked about, this is pretty subtle, but it's important that when you go from a new low, you fall from here to a new low, and then, you know, we had some numbers and some ECB decision, whatever, came all the way back up, basically in a straight line, back to the old resistance. That's a good place to sell. So if you're doing this and you drop to a new low and then you come all the way back and retest a high after a new low, it's really difficult to get above that high. Okay, and that's what you had. You had a drop to a new low, and then you swung all the way back to that high. I said that while we were shorting, that it's going to be difficult to get above there just because where you came from. And so most analysts, they always ignore time, and then they ignore where something came from, and then they ignore how it got there. So when it goes in a straight line and it came from a new low, really difficult to go to a new high. It's really difficult to go to a new high in one swift move. I mean, of course it can happen, but that's not the probability. Usually it's got to come up, do some work, and then go through. And so if that happens, then you got to be a little bit nervous about your sales, but you can still trade it. Where you don't really want to short a previous high like that is if you did something like this, you come off a low and you do a bunch of work, you grind up to the high, and you base right below it. You were to come up like this, then you're poised to absolutely explode. It's a big difference. Drop to a new low, right to the high, versus slowly getting back to the high with a bunch of accumulation and then just taking everybody's head off. Anyway, we sold into that. Never even got a bounce to get aggressive and short more, so didn't have that big of gains, but it's nice and consistent. What we would have liked to see was after this 1 minute roll, after we sell here and we covered into pi, you did get a little bit of a bounce, but a bigger bounce like this would have been nice to get aggressive. Then we would have had a nice bigger morning. It was a pretty shallow bounce, but that was a good trade. And it was the same thing over here on the euro versus the pound, just fading that move, kind of waiting on the cycle. Cycle came up. And you got really shallow bounce here. We did sell a little bit. Oh, whoops. Did sell a little bit into this bounce. So we were shorting, covering, reshorting. Can't remember if we covered this and then reshorted there. Then you got the drop to a new low. Just shorted that bounce. Gonna cover that there. So anyway, did you guys all make money? Some of you guys took off, but and then we talked a little bit about how to buy a strategy on how to build a position in a bottoming process, kind of like what's going on in a lot of cryptos right now, a lot of like Cardano and Salt. Uh, Hector, what was your question? Do you use much correlation analysis in FX? You mean to crypto? Or do you mean between pairs? Or I mean the dollar, when you look at global macro, everything's connected. So the dollar is the world's reserve currency. So pretty much every asset is priced in dollars. So like I've talked about before, you have assets on one side of the equation and you have money on the other side of the equation. And that's why Bitcoin is an asset. It's not money, because we're pricing Bitcoin in dollars. So whatever you want to use as money is going to be on the opposite side as the asset equation. And gold is a good example of that. When gold was pegged to $35 an ounce, guess what? Gold was on the money side of the equation. So when assets rose, gold fell. It's like a seesaw. The pendulum, they're on opposite sides. When assets go up, the purchasing power of money goes down. And the reverse is true when you have a risk off move, or you have a recession like 2008. Assets go down and the purchasing power of your money goes through the roof. The best thing you could have had in 2008 was dollars. Everything else collapsed, and guess what? You get to come back in here and buy assets for pennies on the dollar, versus so your purchasing power rises as assets fall. So when gold was pegged to $35, the dollar, the dollar and gold were tied to each other. You had gold was on the side of money. Well, now we're off the gold standard, and gold is back on the asset side of the equation. So you can see that's why gold went down a lot in 2008, because people were selling assets, right? It's an important distinction. So gold's going to trade more like an asset now. It's not going to trade like it's currency. And Bitcoin, it's going to be very similar. Maybe one day Bitcoin moves to the money side of the equation, but it's not. Currently, it's on the asset side. But anyway, so when you look at markets in general, because they're priced in dollars, the dollar is going to affect a lot of markets. Like right now, the correlation is you have up dollar, you have down stocks, you have down oil, especially commodity markets. So there's always those correlations for sure. Down, dollar up, down gold. Um, what was I going to say? I was just going to show you guys the correlations here a little bit. So, oil peaked here in January, and we had a low in the dollar. We had a little bit of a rally here. on the DXY into the February 9th, February 8th, oil bottomed, the dollar tops. So this is very highly correlated inverse right now. You can see, guys, 2014 here. This is when the dollar broke out. Right here. Breakout 2014. The euro broke down. The euro was just a one-way disaster all the way back to pi. The dollar screamed. Oh, sorry, that's oil. Euro traded the same way. Euro and oil traded the same way. And that was because of this. Get dollar up, you get that strong of a move in the dollar, forget about it. Oil gets crushed. And so did a lot of other commodities. When you have this weakness, you have this bounce. So that's kind of a long-winded answer to your question. And then, we'll look at the euro versus the dollar compared to euro versus the pound and trade those off each other. There's not a very good correlation to Bitcoin and the other markets. I think you're going to see those correlations matter more as more institutional money gets in the market. But what I've been noticing about Bitcoin is I think at some point Bitcoin's going to act more like a currency, or it's going to act more like money. But I think it's going to have more of that flight to quality bid to it. But that's not going to be until the confidence in the bond market and in the public sector and governments really starts to break down. I think you're going to have a monetary crisis before you see Bitcoin rally with a big sell-off. I mean, gold is still a flight to quality for the most part. And I think you'll see BTC kind of pick that up. If the markets have a real risk-off period, I think at some point down the road, people will flock to Bitcoin. But I think you got to have a monetary crisis, and the market's going to have to lose confidence in the Eurozone or in the euro, or going to have some type of like Greece, some stress in the financial markets, whether it's a bail-in or some bullshit again that all the sovereign bond rates are exploding in Greece and Portugal and Spain and Italy. We can see that again play out, and then I think the market might shift and say, wow, there really is a problem in the current monetary and debt system, and then Bitcoin catches a rally and it'll trade the opposite. But right now it trades more like a risky asset, and I think I think the risk is that if growth really slows and we see markets in general roll over, I'm not so sure that Bitcoin's going to take off. I think the market views Bitcoin as a really risky asset. And if you want to take on risk and you want to make a lot of return, you buy crypto. So I think the correlation to Bitcoin to like stocks right now is actually going to be risk on, risk off, from a standpoint that if stocks really roll over, I think you're going to see Bitcoin actually roll over too. I don't think it's going to be a flight to quality just yet. I think capital is going to be like, man, why do I want to take a lot of risk when I should be thinking being in long dollars or long treasuries? I think that's what we're going to see play out. I mean, we'll see. I could be wrong, but the market peaked here and stocks on, what was this day? 28th. 28th. Bitcoin was already going down pretty hard though. 28th, 29th. So we still actually fell into a new low with stocks, and then both stocks and bonds bottomed on the 6th. That's pretty interesting. So that's kind of proven my point that stocks are rallying with Bitcoin, even though this last week Bitcoin's been down and stocks have kind of been up. But the move off the lows, that's what we got to watch. That we might be trading with kind of the riskier assets at this point. Well, Hector, I think maybe down the road. I think if you have a really big, you got to remember Greece was like the tip of the iceberg. So if you were trading then, I mean, I was front and center every day staring at all the riots in Greece. It was just the focus of the markets. And then we had the Cyprus bailout. We had, it was constant back and forth between Germany and what these policies are going to be as far as the austerity and um, Greece Greece's their debt to GDP, all that stuff. So that's just the tip of the iceberg of what's socialism has brought to Europe, and it's just, I mean, the debt to GDP is much worse over there than over here, as far as the U.S.'s debt to GDP. So Greece was the tip of the iceberg, and there's no way out of this mess. Like, there's been zero growth. QE's done nothing in Europe. 10 years, there's been no inflation. Um, so unless government stops spending and reforms and does some sort of debt to equity swap, the problem is not going to go away. So as soon as we have the next downturn and rates start to rise, it's going to exacerbate on itself, and we're going to have Greece 2.0, and it's going to be Italy, Spain, Portugal. All that, the market's going to look to that same spot. That's where you're going to see rates rise first. Could see it in Japan too, or China, but so if that plays out, you're going to see you have rates ripping and the bond market imploding, and you got to see if you could have stocks rally, private assets rally, or you could have bonds and stocks go down. But we'll see then what the market wants to do, because the market took gold up. Gold traded really well, gold and silver during all that crap. And I think cryptocurrency could benefit from the same thing. If the capital in the world looks around and says, "Wow, European Central Bank is broke. It's blowing up. It bought all the bonds on the high. Rates are ripping. The EU is, crumbling. All these separatist movements, they can't fund themselves. The euro was a bad design to begin with. You can't have multiple states' debts tied to one currency. It makes no sense. It's a banking nightmare. So it doesn't take much to have a banking crisis in Europe. ECB knows it. So if you start to see all that confidence unwind, guess what? You're going to see the dollar catch a bid, euro collapse. You're going to see bond prices on the peripheral collapse. You're going to see most likely European equity markets do poorly, unless your currency is just getting crushed so much that the equity markets actually rise. And then we're going to look around and say we're going to need a new monetary system, and we're going to start to move into a monetary crisis. And then you might see cryptocurrencies step in. You might see people buy gold, bid gold up, and buy Bitcoin up. I think that's a real possible scenario that could play out the next couple of years. Might take 5 years. It might start this year. The key is going to be to watch the bond markets in Europe, and if rates start to really break out, then that's what started in Greece. Is when, I mean, you were having Greece You had a Greece 2 year, I think at like 15% or something, maybe even higher, 17%. I got to go back and look. But gold played a big role in that move, and it was a good trade to be long gold. I think the same thing could happen with Bitcoin. I just don't. I'm not sure we're there just yet. So right now we're trading more like it's a really risky asset class. If you want to get a lot of alpha, you want to take a lot of risk, you go into crypto. So if we get a risk off move, then I'm not so sure we're gonna benefit. I don't know. We'll see. The correlation's only like zero point 0.4 between stocks and Bitcoin. Yeah, I think so, Dims. I mean, I don't, some of you guys are over there in Europe, so you guys see the political stuff. I mean, I don't understand all the different parties. I mean, I see the separatist movements. I see, you can see how Brussels is just trying to do anything they can to hang on to power, trying to push people around. They try to threaten everybody that, they try to make an example out of the UK and Brexit to threaten the other countries, and the people don't. That's not the trend. That's not the trend at all. Trend is Eurozone, Brussels is in trouble. So they're just going to get more. They're just going to get more draconian and more authoritative, and they're going to try to do everything they can to hold on to power. But the big thing is the markets. Once the market turns and rates rise, Europe's going to be a mess. The U.S. is going to be a mess too. You can already see like California is about to go belly up. Illinois is a disaster. It's all the public sector. It's the public sector that's going to be where all the confidence is collapsing. Anyway, guys, that's my bearish view on Europe. Let me see if I can get a Greece 2 year yield up somewhere here. Second. I don't use TradingView that much, so I'm not that fast with it. Let's see. I've got some old charts on here. I don't even know what this is up. I think I was trying to look at some of the European yields. I don't know if they have it. You guys know what the symbol is on TradingView for any grease paper? I'm just used to Bloomberg. I don't know how the TradingView. I don't like Trading View that much. Can't find anything on there. They don't. Well, they have bonds. They got Italy's 2-year yield here. It's just the search function doesn't work. So this is Portugal's 10-year, Italy 10-year. What this is. Oh, still don't have a breakout in yields yet. You can't even go back past 2013 on TradingView. Useless. You can see how high these rates were, though, guys. 2013, 6.5%, 7%. How far they came down. If we get back to levels up there, it's gonna be a big problem. We don't have that breakout yet. We got to get some of these 10-year notes above 2.5. I don't know. These charts are kind of weak. I'll see if I can maybe find some better solutions for rate products. All right, guys. Well, listen. Good trading today on the euro. I think you guys know the game plan. Still like selling rallies on euro versus the pound. For those of you that are on our crypto team, I mean, I've been talking about 1300. Signaled sell into pi. We were short, covered into yesterday's low. I went a little bit long, came out of that long at the 5-minute pi this morning. Now I'm back short. Just as a small hedge there. 9300's major area. If we break that, then it leaves the door open for a retest of probably 7,000 area. And then 12,000 is the key pivot on the up. So anyway, guys, I'll talk to some of you in the chat. If I don't hear from some of you, have a great weekend. I'll be back with you Tuesday. All right, Gary. See you, Christine. Micah, you already took off. Danny, later. Jordy. Rio, you guys have a good one. Santiago, Hector.